Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, it's going to take a little bit of a detour, maybe from the typical reviews that we do, just to show you guys something that I thought was really interesting here from Jeffrey Hirsch. If you guys have listened to any of my room sessions, you know that I'm a big fan of the Stock Trader's Almanac. Jeffrey's got a few other books that he has written, but I was just really fascinated by this level over the past 2 days. Again, he's got a book, Why the Dow Will Hit 38,820 and How You Can Profit From It. And I've had that level as a horizontal on my charts, and you can see that yesterday, that was a really important spot. And then today, it was another really important level. Now, this may also just be happenstance that it aligns with the S&P at 5K, but I just thought that was kind of fascinating that his target had been hit so quickly, I think well ahead of schedule, but that does appear to be an inflection point as we get into next week. So with that in mind and kind of thinking, okay, that has been the move that's taken us up into this S&P 5K level. You can see we closed today at 97.91. So from here, what do we do next? And I think it's tough to want to call a exact direction with you because you are still balancing the forces of the market being quite bullish, but this being a really critical area of resistance. So the way that you probably try to think about it, or at least one factor to keep in mind, is the VIX expiration. So a lot of you are probably already familiar with the equity expiration that will be happening next Friday, but the VIX expiration sometimes can be overlooked. This will occur Wednesday prior to equities, an hour before the cash markets open. And the thought process here is that once the VIX expires, all of the contracts, essentially all of the calls for people that have been hedging and thinking, all right, this market's going to crash, the VIX is going to have a big pop. Well, everybody that's been buying calls in the VIX, by keeping the VIX suppressed into that expiration, it's just an effort to let all of these calls expire worthless. So after those calls have all expired, they've crushed down the VIX as much as they can into the expiration, well then that's when you get the chance to reset. So it's essentially to say, SPX is 5K, and this is a big decision wall. I think prices remain sticky against it until we get through that VIX expiration. Then you have the chance for the VIX to pop, and maybe we'll see a little bit of a reset. So those are just some thoughts that I have after Thursday's session has now concluded. We've got a lot more to cover in the members newsletter, so we'll get into that over there. And I hope to see you guys in the chat room tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.